So here on the 8th of January, right after the open, price pretty much exploded under high volumes to the upside and just kept going. I'd like to get into a nice upside continuation on a pullback. That level has been drawn using that's a fib retracement tool right off the advanced toolbar. You'll see it right there. It looks like a W. Just shows the retracement. We're looking for a 50% retracement entry, and at best a golden zone entry, somewhere between 61.8 and 65. 65 being the best, but 61.8 would be a great entry. It allows for a tight stop and possibly a return to the recent significant high. If not, a blow through and a continuation of the upside. Either way, the stop gets smaller, which allows for more profit. Renko Edge firing to the downside, which is kind of good for us. We want some downside. I need sellers to be a buyer. So if the pullback hits the golden zone as we approach 10 o'clock, let's hope it does. We're almost at the 50% retracement and the volatility calculation of 582.25. If the volatility calculation, or the volatility index as I refer to it, is hit, we can then expect further downside, and hopefully we can get a golden zone entry. Looks like the golden zone begins at 577 on the way down. Tick strike showing some downside order flow. The first trade of the day I took at half risk. Risk is already set to paper cut. So for me, technically my risk is already cut in half. So to take half of that by trading a one lot instead of two, I'm actually at 25% paper cut risk. Extremely low. But over the course of a nice day, if the day pans out and price action is good, it could be several $100s per account. I'm trading 20 accounts. At times, during a market with more momentum, I might have entered a starter position at the 50 and then a second position at the golden zone with a tight stop of, say, 5 points below golden zone. For now, waiting to see if we can get the full golden zone pullback. And of course, in the meantime, not relying on one type of chart or one chart itself, I'm also watching this chart. I'll drag it in real quick. That's a 377 tick, just for faster sort of price action information that may come from where we are currently. Notice the edge hasn't fired. The TDI is trying to green. But that can change in a heartbeat. It's a very fast chart. And here's an attempt at the golden zone. Watching the footprint. Going to go ahead and take that there. That's a full risk trade. Well, technically half risk based on my paper cut, but two lots. The first target, I'll slide down inside the internal high. Stop management time. And again, the beauty of using that golden zone is a much tighter stop. Limit losses. Lose small. We're at the top of it. There we go. We want to break out of that trend. Stop to break even at 12 points. Order. There we go. First target hit. Stop is trailing. Now, it's possible that coming into 10, it's 9:55, we may stop right at the opening range high or the week high. It's okay to get out right here. 12 points. We do have a mini change of character. What happens is we lose momentum on the way up as people that are long cover their positions, looking at that most recent significant high that poses resistance. I may tighten the stop up a little bit. Yep. We'll let the market take us out one way or another. Either we'll see. There we go. So that one filled at 7. So I believe it was plus 12, plus 7. I'll update that. Profit there was 13 points on position 1 and 8 points on position 2. Nice trade.